Ready.
Comment on your bow tie or no? Good evening, everyone. If I could have your attention, please. Good evening, everyone. Thank you all so much for being here tonight. First of all, I'd like to welcome you all. We have folks from all over the country here, but first we want to give a big shout out to the team here at Sea Palms. Let's give them a big round of applause. Thank you. Wonderful work. So for my first song tonight, just kidding. We'd love to thank you all for being here. We know that it's been quite a while since we've been able to get together in person here, so thank you all for coming. We're in for a fantastic evening tonight. We are so excited to tell you more about our impact investing and about our foundation. But before we do, we'd like to go ahead and get the night started here. I would like to introduce our founder and CEO of DLP, Don Wenner.
I'm going to make sure they turn it up. I do. All right. First, quick audio check. Can everybody hear me well? Back of the room. Yes, everybody hear me well. All right. Everybody on Zoom. All right. Welcome. So as Larry said, we got people in this room here tonight from all over the country. I've talked to people from California, from Pennsylvania, from Texas, from Utah. So thank you guys all for making the trip in, spending this weekend here in beautiful St. Simon's Island with us, as well as local residents here in St. Simon in the room with us here tonight. And then we have people joining us on Zoom from all over the country as well to be a part of this dinner and the silent auction that's happening right now. So a reminder to anybody who hasn't already taken part, we have a silent auction going on right now. The link is right on the screen to either text or go to the website. So if you're on your phones, if you haven't done this already, you can text DLP to 243725 and still take advantage of the silent auction. It goes until 8:30 tonight. We've got a lot of cool gifts, a lot of cool prizes, things that have been donated here. From vacations in St. Augustine, Florida, to Asheville, North Carolina, to a beautiful vacation in the Jersey Shore and a brand new beach house, to seats to Jaguars games and Magic games, to a coaching session with my personal coach, Jackie. Where's Jackie at? Right over here, which would be really powerful. And then lots of other cool gifts. You guys saw some of them out in the hallways here, for those who are here live. So please take part and help us. As 100%, all the gifts were 100% donated, and all of the proceeds are going to our foundation, which you'll hear more about a little later in the evening here tonight. So please, if you haven't already, text DLP 243725 and take part in our silent auction. All right, so I'm going to start the night off here a little bit with telling you a quick bit, since we have some new people here. Raise your hand if you've never been to a DLP event before, don't know much about DLP. All right, a good amount of the people in this room tonight, right? So I'm going to start off with telling you a little bit about DLP, who we are. And I'm going to tie that into why we're here in St. Simon's as well. And then I'll dive into how we're making an impact, as this is an impact investing gala, and how we do so in our investment funds, and then how we're doing so in our foundation. So first, this little chart on the screen shows you an overview of all the DLP companies that work together to provide and make an impact that you're going to hear more about. The center of our universe here at DLP is DLP Capital Partners, which is our private investment management company, which many of the people in the room here tonight are already investors in. And we provide capital to real estate operators, a number of which are in the room with us here tonight. And we invest in workforce housing that's affordable for the local workforce. And you'll hear more about that tonight. Quick bit about myself. I started a little over 15 years ago, which I'll tell you kind of how it all started in a moment. Over these past 15 years being in real estate, we've closed more than 16,000 real estate transactions. We've done over $2 billion in acquisitions. We've done over $2 billion in lending to other real estate investors. Again, some of which are in the room with us tonight. Thank you. And we've won lots and lots of cool awards for our growth and success, growing by more than 60% every year for 15 years. I'm also proud to say I'm going to be calling on this group and everybody on Zoom in the weeks ahead to help us out with the launch of my book called Building an Elite Organization, which I'll mention more in a moment, which is officially going to be out in 2 weeks. Of course, although a number of you, as I talked in the hall, like to give me credit for a lot of the success we've had, but the credit here at DLP and the success we've had is due to this leadership team and all of our amazing support team throughout DLP. And can I get DLP team members to go ahead and stand up? Let's get them to stand up and give them a little bit of recognition here. Thank you. Awesome. So we scattered them around the room here, so please take a chance to get to know them here tonight. And these are the people who make everything I'm going to talk about here tonight happen. To give you a little idea who DLP is from a size standpoint or a number standpoint, right now we have 1,250 investors, families who entrust their capital with us, including over 100 in the room with us here tonight. We take that capital that's entrusted to us, our $1.25 billion of assets under management, and we deploy that capital out to real estate operators, helping them grow their business, a number of which are in the room. A number of them are wearing these cool blue blazers here. You see Brian standing up there. A number of them are in those cool blue blazers. These are some of our best operators who we're entrusting and investing capital with. So I welcome you to chat with them tonight as well. We own over 11,000 rental homes throughout our portfolio, which I'll show some of those here in a moment as well. Most importantly is we're providing housing to more than 25,000 people right now. We're supporting more than 200 entrepreneurs, and we have over 400 employees, 400 team members here at DLP. So with that said, and I'll ask everybody, quiet. Make sure everybody on Zoom can hear us here. So I'm going to move quick here, give us lots of time to enjoy our appetizers and desserts and so forth as well, and have some great live piano here in a moment as well. So I'm going to start off with telling you a little bit how it started. And I've actually never kind of told this story. So those of you who've been here a long time with DLP haven't heard these exact stories. And those who are new to us here in St. Simons, I tell you a little bit how we got here to St. Simons. So how we got to St. Simons and how I got to where we are here at DLP started when I was about 19 years old. And this picture here is from our last event that we did. Some of you were at in November in Ponte Vedra when we were doing our Elite Prosperity event. Same thing we're doing here this weekend in St. Simons. The tall gentleman on the screen is Ben Wallace, Defensive Player of the Year, just was nominated at the Hall of Fame a couple weeks ago. He was there as one of our speakers at our last event. And the gentleman who actually isn't that short, but is pretty short, my good friend Nathan Robinson on the screen there, who was at our event, is how I entered the world of real estate and how I entered the world of business. So when I met Nathan, I was going to college at Drexel University in Philadelphia studying finance, thought I was going to be a financial advisor, got all my licenses, but I was spending the weekends waiting tables at a Texas Roadhouse. Who's been to a Texas Roadhouse before? Okay. Hopefully our food can match Texas Roadhouse tonight. It's pretty great steak. More bread, yes. So I was working at Texas Roadhouse, and for some reason, Nathan was insistent that I should come to work for him as he came into that restaurant to eat regularly. And for whatever reason, he saw something that he really wanted me to come work for him. And he asked me time and time again to come work for him. Finally, one day I said, all right, Nathan, I'll come talk with you. I went to his office and sat down with him. And he asked me, how much money are you making a week right now waiting tables? And I said, about $1,000. And he said, well, I guarantee you, if you come to work for me, you'll make twice that. And I said, well, what is your business? He said, ADT Security. No idea really what that meant, what the job would entail. But he told me I'd make $2,000 a week. At 19, that sounded pretty good in college. I said, all right, I'll give this a try. And so I started, I think, the next day. And my first paycheck was $5,280 for 2 weeks. Not bad at 19 years old, right? That was one of my worst paychecks I ever had. And so I was selling a lot of alarm systems, and my job consisted on knocking on doors. I was one of those guys who came and knocked on your door to sell you an alarm system. And obviously, hence I was making good money. I was knocking on a lot of doors. In fact, I only sold an alarm system 1 out of every 51 doors I knocked on. So I knocked on a lot of doors. Later, I found out that Nathan was completely full of it. He had never had anybody make $1,000 a week for him, let alone $2,000. But that's what he told me I should make. So I believed it and went in with that mindset and had great success. So I thought I was on top of the world. I was 19. I think I might have just turned 20. And I'm selling alarm systems. Every 2 weeks, Nathan writes me my check for $6,000 or $8,000. And I started seeing he had some bigger checks sitting on his desk for $15,000 or $20,000. And that was from his real estate business, helping people buy and sell real estate at Keller Williams Real Estate. He said, Don, if you can sell alarm systems knocking on doors, you can sell real estate I said, all right. So 2 weeks later, I was a licensed real estate agent. My marketing message from the very first day I entered real estate was, your home sold guaranteed or I'll buy it. And that month that I got into real estate was October of 2006. And October 2006 was the peak of the real estate market in Lehigh Valley, Pennsylvania. That's when homes hit their peak. The market started slowing down. So it was a really good marketing message that I was guaranteeing to sell people's home when the market was starting to slow down. Led to a lot of motivated home sellers. We helped a lot of people sell their home. And my real estate career began. We quickly started stepping in and flipping homes as well, buying homes, renovating them. And then soon into that career, my relationship with Nathan, he insisted to me that I needed to learn how to golf. That golf was fundamental to business success. So I think that somehow my marketing team found this real picture of where my golf ball was every time I went out with Nathan. It was in the brushes. In fact, the very last time I went golfing with Nathan, I was in the brush so much, I ended up getting Lyme disease. And that's not a joke. That's a real story. I ended up getting Lyme disease. I was out there in the brush so much. So that made perfect sense to why we're here in St. Simons and why I own a golf course now, right? So Sea Palms Golf Resort, beautiful resort that hopefully you guys are enjoying, and some of you will get to enjoy some golf here over this weekend. Is an interesting story how we came here. So many years later now, around 2015, 2016, we had started our lending business, lending to other real estate operators. And a gentleman called me up. Some of you may know him here in town. Joe McDonald called me up and told me he was buying the Seagate Inn on the beach here in St. Simons. I had never been to St. Simons, even though I live in St. Augustine. Came up here, kind of fell in love with it, as many do. So I was originally looking to do this loan for Joe. Turned out he didn't have the equity to do the deal. So I said, all right, I'll partner with you. This is a great opportunity, great deal. And so I've owned the Seagate Inn now for the past 6 years or so. It's been great. And the person who used to own Seagate Inn was a private lender out of Atlanta. And they called me up, a year or so later and said, hey, we have another resort for you to own on the island. It's this really great resort called Sea Palms. And I said, all right. So I came out and took a look at it and I said, man, this is a lot of work. I said, as you guys know, the golf course was in pretty rough shape. The whole place was in pretty rough shape. It was beautiful, but I said, I don't have the capability. I don't have the bandwidth to try to tackle this monster. As exciting as it was, I said, there's no way I can tackle this, and I politely declined. So a couple years later, I get a call from some partners, some other elite operators that we work with, like some of the gentlemen in the room, a guy named Kip and a company called Reef. We're out of Dallas, Texas. And Kip and I had bought a couple thousand apartments together at that point in time. And he calls me up and says, hey, Don, I got this deal I think you should partner with me on. It's in this town. He couldn't even pronounce it. Called St. Simons. I think he kept calling it St. Simon. But he said, it's really interesting. It's a really great opportunity. I got this local guy, Will Carter, who's going to run it. And I really think you should come in on this with me. And I said, well, Kip, I know it. I own a resort downtown. I've been there before. It's a lot of work. He said, Will's the guy to do it. He can make this happen. So long story short, I partnered up with Reef out of Texas. Will Carter came in here and took control of this. That was, I think, May of 2019. And you guys know, hopefully those who've been here and live here, the amazing work that Will's been doing, renovating the entire golf course. You guys should see the new flooring that they were just putting the last couple of days here, renovating the clubhouse. And wait till you guys, if you haven't seen the rooms, do an amazing job. So it's been a great investment. I still have not golfed since I got Lyme disease. So one of these days, Will's going to get me out there on this golf course. I've drove through it. It's gorgeous. But been a really cool journey to get here, and fell in love with it. Hence why we now do an annual event here in St. Simons every year, other last year when we tried to do this right when COVID started. So it's really cool to be here and be making this happen. So appreciate you guys all being here with me. And let's give, especially everybody local here, let's give Will Carter a round of applause here. All right. So here at DLP, a lot of our success comes down to really incredible people. We like to say our culture is the key to our success that we've built here. Hopefully you get the opportunity to chat with. That's why I had them stand up, chat with a lot of our leaders here, chat with a lot of our team members, get to know them. I'm confident you're going to see our values that I'm going to show you in the next slide emulate through them. Another cool little story here, and that is all of these people here are my family who all work in the business. So these are 4 of our 400 team members. My father, My mom, my stepfather, and my stepmother all work in the company and have anywhere from 4 years to 13 years now. My brother-in-law is in the room over here. It's been 8 years, he reminded me this morning. But my wife reminds me she's the boss. But really cool. We have a lot of incredible people. You get to meet many of them here tonight. When we started off and we started doing these dinners, as some of our longtime investors are in the room who've been with us. Actually, our first investor event we did was in Ray's basement of his office building. Where's Ray at? Right over here, yeah. So it was a bowling alley in a basement. It was a cool basement. I think there were 20 of us about 8 years ago. Over that journey, these last 8 years, we've grown by 60% or more every year. Actually, we've done that for 15 years. We're one of the 5,000 fastest growing companies in America for 8 straight years, 4th fastest in the country. So pretty cool. We've won lots of great awards for the amazing culture and organization we've built. A big part of our growth and our success has been what this book is all about. So this is my book that will be out in a couple weeks. We have lots of copies here for everybody here this weekend as well. Thank you. Thank you, Jackie. So building an elite organization is the blueprint to scaling a high growth, high profit business. And it's a book on how we run DLP, how we run the elite execution system. It's a big part of how we've been successful in our business, but also what we do, and we help a lot of great real estate operators. We have over 50 real estate operators from all over the country here who we lend capital to and we invest with, who are here focusing on implementing these disciplines and these practices into their business. We're a purpose-driven organization. For those of you not aware, DLP stands for Dream, Live, Prosper, passionately creating prosperity through real estate. We're very proud of our ability to have done that over this past journey and the journey ahead that we hope all of you will be a part of. These are our core values that drive our day-to-day decisions. I'm confident you'll see these emulated from each of our team members here that you talked to this weekend. All right, so enough about DLP. Let's talk about what we're focused on doing. So we are here tonight in an impact investing gala. So I'm going to first start off with defining what impact investing is. So impact investments are investments made with the intention to generate positive, measurable, social and or environmental impacts alongside a financial return, right? So a investment that's both profitable for those who invest, but also is focused on making an impact on a significant cause. We strive to make an impact on 4 crises here in America and around the world. The first and the most obvious one in what we do as an organization is the affordability crisis of workforce housing. We like to say we like to invest in workforce housing that is affordable for the local workforce, right? That's the local nurses and teachers, police officers who at a growing pace cannot afford to live where they work. It is a true crisis, an epidemic here in America today, and it is getting worse every single day. And I'm going to show you a slide that even though I know this data, blows me away. The second crisis we're focused on is the jobs crisis. Somewhere around 50% of jobs in America today are at risk of being automated in the next 10 to 20 years alone. We're 50% of jobs. Tremendous amount of jobs are going to be lost to automation, not lost to overseas, but lost to automation in the next 10 to 20 years. And I believe, despite what the government likes to tell us, the government doesn't create jobs. Small businesses create jobs. That's the only way you can create jobs. Thank you. So that's a big part of the reason to why we're here this weekend, to why we wrote the book, Building an Elite Organization, which is focused on helping organizations scale and grow and provide jobs. That's what we're teaching on this weekend. That's a huge focus of how we're growing DLP, is that focus on not only us growing and creating jobs, but helping a lot of other operators do so directly in their organizations, but also through their communities. There's no better industry out there than real estate to create jobs, especially when you're doing construction. The ripple effect of all the jobs that are created through construction are tremendous. And then the third crisis that we're focused on is the generational wealth crisis. And that's what, for those of you who are staying tomorrow on with part of the prosperity event, and those of you who are here local to St. Simon's who aren't signed up for the weekend, if you want to join us tomorrow, we welcome you to still join us. You can talk to any of my associates, Rich over here, Larry, and I'll point them out then. But if you'd like to join us, and if this piques your interest, we welcome you to come still join us yet this weekend. But the generational wealth crisis is that most families, many of you who worked really hard throughout your life and you've built some wealth, unfortunately, the majority of families' wealth will be lost, if not by the second generation, the third generation. The majority, despite all the hard work, right? So we're focused on changing that and helping people both live a legacy and leave a legacy. And that's what the Prosperity Membership's all about. And we'll be focusing on this weekend. And then lastly, which might seem the least obvious per se, is the happiness crisis. And 40% of Americans today, and this number has gone up dramatically due to COVID, 40% of Americans today are struggling with some sort of mental illness. The number one being depression. And we're reading as a company right now a really great classic book called How to Make Friends and Influence People by Dale Carnegie. Who's read that book? Right, most of us, right? Maybe 20, 30, 40 years ago, right? But it's a classic book we're rereading as an organization today. And what Dale says, which I think is 100% still true today, is the number one human desire is that of importance. And more today, people feel unimportant. They feel insignificant. Social media has certainly accelerated this feeling of insignificance. And then COVID has exacerbated this situation more and more. And I believe that it's the organizations, it's companies, it's leaders in organizations' job to impact this, because I believe most people's impact where they feel important is in their work. And if they don't feel they're doing important work, they don't feel they're making an impact with where they're putting the majority of their time, they're going to struggle with feeling important and impactful in their life. And I feel it's our job as leaders to make sure our team members are in an organization and understanding the importance in the work they do every day. And that'll carry through to the importance and the impact they're able to make in their home life, their faith life, and every other aspect of them as a whole. So these are the crises, and that's a big part of, again, our elite execution system, helping organizations not only grow fast and employ a lot of people, but really make a workplace that's impactful, build an incredible culture, help team members grow and develop, and we call live fully. We're really excited not only for us to go down the journey of making an impact on this, but many of the great operators who are here this weekend, growing organizations doing the same. So we believe we can make an impact on all four of these crises while we deliver consistent returns to investors, which I'm going to show you how we've been doing over the past decade in doing that, while preserving, and creating safe, clean, and affordable housing, while growing businesses and creating jobs, and helping our residents, our 25,000 residents in our properties and growing, create wealth and prosperity. So here's a simple stat. You probably can't read everything on that screen, but the simple message here at the start of this, you see it says, the average American family cannot afford to own a home in most U.S. counties. That's true almost everywhere. The average family can't afford to own a home, and that is growing rapidly. So that puts more people into the requirement of renting, or even if the renting is an option, most renters today are overly burdened by the cost of rent. In fact, more than 50% of Americans are deemed to be cost burden, meaning more than a third of their income goes to pay for rent alone. About a third of Americans spend more than 50% of their income on rent, meaning they don't even have enough money left over to pay for food, education, healthcare. And that number, that percentage of people in that situation is growing rapidly. What makes it even worse that we have so many people in the situation is not only are there very little new product coming that is affordable to help solve this, but more and more operators, unfortunately, similar in a way to DLP, are actually making this issue worse. Because what we're doing is coming in and taking an apartment community where rents are $800 a month and affordable, and dumping a ton of money into them and raising the rents up to $1,200, and now taking that unit out of affordability. So an estimated 500,000 units are being lost a year right now that are affordable for the local workforce. That's pretty crazy, right? So it is a tremendous crisis. And I'm going to talk more about it, but I'm going to get you guys, we're going to do this a few times tonight. So I'm going to get some participation here. So perfect timing before everybody's dinners gets in hand. So those of you online and those of you here in the room, I need you to either do one of two things: pull up your web browser on your phone or your camera. You can do it if you use your camera. You're going to scan this QR code with your camera. You just put your camera over that QR code. Or if you just go onto your web browser and type in Slido, S-L-I-D-O. So go to your web browser and type in Slido, S-L-I-D-O. Up here's the QR code, so you have to scan this one, sorry. So if you scan that, it should pop it up, but otherwise you just go to your web browser, five letters there, slido.com. And when you get on slido.com, you're going to type in that code there, pound, or actually I don't even think you have to put the pound in, R671. Okay? And the question that that's going to pop up on your screen is, at what percentage have rents increased in the past 10 years? So the first answer that popped up live is 100. So as you guys type your answers in, you guys see them popping up there. Or somebody put the code into the answer. So, but 50, 20, 7. So I'll give it a second here as I get a glass of water. So these are your live answers to what people think rents have gone up. Some pretty good guesses here. 50, 15, 7, 200, 350. Appreciate the participation. And we're going to go through this a few times with some different questions here tonight. So keep that app open, and it'll be easy now because the next question will pop up when I get to that screen. All right, so the number one answer, the one in the middle, is the one that most people are hitting, which is 50. That's the most common answer so far. Now, next question, so keep your phone up. It should change. The question should change now on your phone. At what percentage have incomes grown in the past 10 years? So some of those answers, I'm guessing, are from the last question. Here we go. So what percentage have incomes grown? Not rents. How much has the average income gone up in the past 10 years? So 10, 3, 20, 15. All right, pretty good guesses here. All right, so the most common answer there is 10%. Good guess. Very good guess. All right, so and I'm going to hold you in suspense for a moment, and I'll give you the answer. First, this little charts here show you vacancy in America. So vacancies continue to go down. That top chart shows you the average vacancy of rentals. We're at near all-time low vacancies today. And the bottom chart shows you the vacancy of homeowners is about 1%, lowest vacancy almost ever right now. So we have the greatest undersupply in housing today in America as a whole, but it's dramatically more undersupplied in the affordable sector. So here is how much the average rent has gone up here. In 1997, the average rent was about $400. 10 years ago, it was somewhere around $700, a little over $700. Today, it is $1,190. So think about that. In 2010, average place for rent was a little over $700. And today, it's $1,190. That's a 70% increase in the average cost of rent in 10 years. Is that not amazing? Look at how, and that pace isn't slowing down. Look, we're in the middle of a recessionary environment, according to the U.S. Census Bureau, and that rent has skyrocketed up. Look at 2020. Look at the pace it went up in 2020. It's going up much faster now than it did in the past 9 years. You would think the exact opposite of what we've gone through in this past year of COVID, right? It's actually accelerating, not slowing down rent growth. It is unbelievable. 70% growth. So depending on the data source you look at in the same 10-year period, the average income growth is 6 to 8%. So incomes have gone up 6 to 8%, and the cost of living has gone up 70%. Anybody see a problem with that formula? Right? This just shows you here, I mean, a lot of Americans today are struggling and deemed to be at extremely low income levels and struggling to find housing. Well, so it makes it worse. This slide here shows you how much, so the average rent for the average household today would need to be $10,300 a year to be affordable. Or in other words, about $900 a month. To build a new apartment today, on average, costs $195,000, which means we'd have to build new apartments at a 2.9% cap rate before the cost of land if we got our land for free. So really somewhere around a 2% cap rate to be able to build housing in Mobile throughout the country. And then the job crisis has dramatically increased as well through COVID, as it's accelerated probably by 10 years, this environment of working from home, this environment of needing less people, of automation, of technology advancement, and is drastically increasing this challenge. So what we focus on doing is coming into affordable communities, and I'm going to define that in a moment, coming into making physical improvements, improving the management, ensuring the right residents are in the property who take pride in their homes, giving them incentives to take pride in their homes, making the community safer, and providing housing that is affordable and remains affordable to the local workforce. We're bringing a lot of unique enrichment programs to our residents to improve their quality of life, to often change their way of thinking, from healthcare to education, to career advancement, to savings, to community events, to after-school programs, to church services at our properties, helping our residents, we like to say, choose and grow their prosperity. We're focusing on delivering wow and retaining these residents. That's a big part of us operating these communities most effectively and keeping our rents effective is keeping our residents and having lower turnover costs. We come into these communities and tackle exterior neglect and make the communities attractive, put good amenities in place so they can be proud to bring people to their home, to their apartment. We reduce operating costs through these improvements we make and through keeping residents, putting in new appliances, new heating and air systems, hard surface floors, hard surface counters, things like that. Adding amenities from playgrounds to dog parks to better community centers to community gatherings, while keeping the units affordable. And yes, you can do all of that at the same time. So I'll show you some of our recent acquisitions, and I'll talk a little more how we do that. So these are the assets we've bought. I'm going to show you a bunch of communities. You're going to see a lot of pictures. Pretty exciting is we've bought all of these communities in the last 1 week. So we've closed on about 1,600 apartments this past week. So it's been a busy week, as Barry, our Chief Legal Counsel, can tell you, and Anthony, Head of Investments, can tell you. So we closed on these 4 communities in Gulf Coast. So you're going to see some pictures. These are in Gulf Coast, Mississippi, Orange Beach, Alabama, Jackson, Mississippi, and Senatobia, Mississippi. These are built largely in the late 90s to early 2000s. Our rents range from $866 a month to $970. So affordable. On average, we're around a 21% affordability, meaning our rents are 21% of what the average income is in that market, which is very affordable. So, but these are what they look like. This is Prosper Gulfport, nice community, nice finishes, nice place to live, right? $866 to $977 a month. This is Prosper Orange Beach, near the beach. Again, very similar. These were built by the same developer, so you'll notice they're pretty similar. Prosper Jackson, a little bit older, built in '96. But again, you can tell very, very similar. And then our oldest community, built in the '80s, Prosper Senatobia, a little bit north of Memphis. You can see that one a little bit older, but still well-maintained, clean. Our service manager here has been working at this community for over 20 plus years, takes a lot of pride in keeping this place in great shape. Then last week, we just bought 2 even newer communities in Kentucky. So who's been to Paducah, Kentucky? Wow, more than I would have thought. All right, awesome. How about Owensboro, Kentucky? All right, same group, but that's awesome. All right, so these are 2 towns in Kentucky, both very charming. So these communities were built in 2014 and 2016. Very nice, built by the same developer. He builds a lot of the same communities throughout this region. So these are 2014, 2016 communities. You can see great amenities, really nice, well laid out, car washes and dog parks and beautiful clubhouses and nice gyms and nice appliances, granite counters. But our rents are $851 and $887 a month for those 2 communities. Right, about 21, 22% affordability. So affordable doesn't just mean owning C-class assets, older assets. We found that we can find, great opportunities to buy really nice communities and still be very affordable and be able to maintain affordability. Upcoming community. This one is brand new construction in Memphis, Tennessee, Germantown area. Very nice part of Memphis, right near the FedEx headquarters. This is a 288 unit community we close on next Friday. Really, really nice. As it's brand new. This one has higher rents, about $1,100 a month, $1,150 a month. But for this area where the average income is $80,000, and teachers are earning, $60,000 versus $30,000 in rural Alabama, it's still very, very affordable. And we're actually, Anthony, we're just talking, we're actually working to buy another deal from the same developer right now in Greenville, South Carolina. So average rent's $11.55 a month. Coming up right behind that, we're closing on a community in Oxford, Mississippi, Ole Miss area. And this is a student housing asset that's struggling due to COVID. Built in 2009, again, really nice student housing asset. We're going to come in here and open up the demographics to allowing both resident or students and non-students, which will drive up occupancy and drive up the performance of this community. We're buying it at $70,000 a door for 2009 construction of a really nice asset in a fundamentally really strong but small market. So these pictures here are the assets we own right now in the DLP Housing Fund, over 6,000 units, over 25 communities in I think 11 states, primarily all workforce housing communities that are affordable to the local workforce. So if that resonates with you, our investment fund that you can invest in this strategy is the DLP Housing Fund. This is a $1 billion evergreen private REIT. It's our 8th fund we've launched. We primarily invest in these types of communities I just showed you. Our goal is to grow this fund to providing housing to 250,000 residents, meaning we're going to own 100,000 units in this fund. We own 6,000 today, so we got a little bit of work to do, Anthony, Lou, team. So what we're focused on, how we're kind of screening opportunities, is we target communities that are affordable, meaning the rents are less than 30% of the household income, of the area median income, okay? Generally, we're looking for a minimum household income of at least $35,000. We're targeting secondary and tertiary markets, but of at least 50,000 people. We're primarily focused on 1990s or newer. We're focused on buying communities generally over 200 units. And we want to be able to achieve a 7% cap rate on our yield at our cost. So those are kind of the fundamental filtering that we put our investments through, starting with the affordability. This is where we own communities. We're in 21 states in total today, about 11,000 units. So highlights to this fund, I'm going to move quickly here to keep us on time here. So the DLP Housing Fund, target of this fund is a 12% return net to investors with monthly distributions, 0.5% dividend every single month. So ability to have great income while having tremendous growth, incredibly tax efficient, very, very, arguably the most tax efficient investment you'll invest in. And you have the ability to get out of this fund every year. So we're going to grow this fund, we expect, for decades. But you have the ability to exit this fund every year. You don't have to make any long-term commitments. Phenomenal fund, already owns 6,000 plus units, already generating great cash flow. We do a great job of mitigating risk throughout our portfolio through our acquisition approach, staying focused on value, and focusing on this strategy of affordable housing. We think no matter what kind of a recessionary environment comes ahead, when you own housing that's affordable for the local workforce and you're in markets with growing populations, we're going to do just fine. And we've seen through COVID, every month we broke new all-time physical occupancies in our portfolio, every month now for a year. We've capitalized on these incredible low interest rates as well. We are dealing with higher delinquencies than we like. We've averaged about 6.5% through COVID, but we're dealing with moratoriums and the government not allowing us to evict. Some states are much worse than others. But because of the all-time high occupancies, we've had higher cash flow since COVID than before COVID. Our cash flow has grown quarter over quarter, despite all the challenges we've dealt with. All right, so that's one side of our business. That's what we do as an operator. I mainly talked about, but we're in a very similar business in terms of providing capital, lending money to other investors who are doing very similar things to DLP. So can DLP operators stand up quickly? Get people see you guys here. Yeah, stand up. Yeah, give them a round of applause. So these are some of our best operators. Awesome. Thank you, gentlemen. So they're sitting here quietly listening to what we do, but they're doing very similar great things in their markets. Some of them are single family operators. Some of them are doing all new construction, build to rent type communities. Some are doing heavy redevelopment projects, RV parks, you name it. But almost all of them revolving around workforce affordable housing and finding different unique strategies to capitalize on that. And we're proud to be able to provide them with capital, in many cases also partner with them, and then those investments are in the housing fund as well. So we do that through our lending funds. Our largest lending fund is called the DLP Lending Fund. This is a $1 billion evergreen REIT, mortgage REIT. This fund has a 10% return target. All of the income is distributed every month. So we're distributing 10% plus returns every month with 90-day liquidity. This shows you what the returns have been. Over 7 years we've been running this fund. We've generated 13.42% net to investors, with all the income distributed every month in 90-day or better liquidity. Here's our actual returns every single month. Our lowest return we've ever had in a month is 11.02%. That's our worst month we ever had, was an annualized return of 11%. And that was in the depths here of COVID, as we sat on a lot of cash. Phenomenal fund, grown tremendously. This is our main fund that we're providing capital to these great real estate operators who are also making an impact on housing and on jobs. We're helping these guys not only invest money in their deals, but helping them scale their companies and make an impact on this jobs crisis as well. We do things like this event we're doing this weekend, where we have them in here learning and growing and focusing on how they build and scale their organizations. We provide them with structured line of credit capital, so they know exactly what the terms are. They can be confident going out there and winning deals and investing capital. And we make it much easier than most lenders, because we have the advantage most lenders don't have, which is all of you, which is that we have a great investor base who entrusts us to make the best decisions on what to lend. And we're allowed to do things that other institutional groups can't do, that make great sense to do, but they can't do because they're reliant on selling those loans to Wall Street. So we're lending to really high quality operators. Every one of these operators here in this room all have great credit. They have greater net worth than many of our investors have. So our average borrower, this is not our top borrowers that are in the room, this is our average borrower. Our average borrower has a 712 credit score, has a $3.5 million net worth, have done more than 50 real estate deals, and have 500 grand of liquid cash. That's our average borrower, okay? On average, we're lending at 55% loan to value and 72% loan to cost, meaning they're putting 28% of the cost of purchase and improvements out of their pocket. And these are short-term loans. We're helping them largely get to permanent financing as quick as possible, or in some cases to sell those homes. And generally they're paying off our loans in 9 to 10 months, either through a sale or a refinance into permanent debt. What I'm really proud to say, and I want to thank all those gentlemen who stood up, since COVID started a year ago, and Daniel here, our head of servicing, can attest, we've had 0 loans go 30 days delinquent. 0. 0 forbearance agreement. Thank you. So who's heard about all the forbearance agreements and foreclosures and all the stuff since COVID, right? We've had 0, not 1, on 700 plus loans. Every borrower has made every payment on every loan, right? That's the quality of borrowers we have and the relationships we build with them. This gives you an example of the average type of property we lend on. This is in Duluth, Georgia. They came to us. We gave them a $145,000 loan to buy this property for purchase and renovation. They turned it into this. It was a 61% loan to value, 10% interest rate. They paid it off in 10 months. I did a great job of renovation. That's an average kind of down the middle loan that we do all day, every day. All right, so grab your phones out here again. We're wrapping up and going to move into the Gala, the silent auction here, and some notes on our foundation in a moment. All right, so all you should have to do is pull your phone back up, and this question pops up. What is the average percentage that first-time home buyers put down when they buy a home today? Right now in today's market, how much does the average first-time home buyer, when they go and buy a home, their first home, put down as a deposit or a down payment? 5 is the number one answer so far. 3. So think about this. The average bank today, we all know interest rates have never been lower, right? If you were going to go get a first-time loan, you'd get an interest rate in the 3s, right? So think about lenders, banks out there today are making loans to first-time home buyers at an average interest rate of somewhere around 3%, 3.5%, something like that, right? And that average borrower is putting down 3.5%, but it's actually a lot less than that, because they can roll their closing costs into their mortgage. They can roll 6% closing costs, so they can actually get a mortgage for 102.5% of the purchase price, in effect. So that's what most first-time home buyers do. Not just first-time buyers, that's the #1 form of financing for all home purchases. So think about that. All these big, sophisticated institutions are making 3% interest rate loans to a first-time home buyer, scraping together at most 3.5% down to buy a home, right? Our average borrower are these gentlemen with $3.5 million net worth, 500 grand liquidity, lots of experience, putting 28% in. And we're earning on average to our investors double-digit returns monthly, right? It's a phenomenal, phenomenal strategy that serves a huge need for our real estate operators. All right, so we have 2 other funds that also make loans. I won't get into the differences, but the Income and Growth Fund is very, very similar. Last year, 11.96% net to investors. And then if you say, hey, I like this lending strategy, but I want to be in your absolute lowest risk position, you can invest with us in our Positive Note Fund and get a fixed return on your investment. 5 to 10% fixed return that's guaranteed by DLP, not guaranteed by the FDIC. Return that you earn every single month. You can take the income or let it compound and grow. This is net of all fees, 5 to 10% fixed net to you. That's a great way that a lot of people start off with us and get a really great consistent return, monthly checks, and grow. And I say this is our lowest risk position as it is because we're obligated to pay you no matter what this fixed return. But I do want to reiterate, all of our existing investors know this, we've managed 8 funds over the past decade. We have 1,300 families. We've paid out literally now, I don't know the exact number. I know Bo was working at over $1 billion out to our investors. Never have we lost $1 of investors' money. Never have we even missed a return in a single period in any of our funds, ever. So great, consistent return. Thank you. All right, so I get to take a break here and pull up my good friend Lee, who's going to talk here with Larry a little bit about focus he has. I'm not going to give any more details. I'm going to let him talk about it. And then after Lee goes, we will open it up to questions to the group. We'll kind of probably keep that a little bit short on time. And then Rich can tell us a little about the foundation that the Gala, the silent auction is supporting. So where is Lee? There he is. All right, right in front of me, hiding right where I can see him.
Come on up, Lee. Let's give Lee a round of applause. So I told Lee we weren't going to put him on the spot. So Lee, obviously you've been with us for a number of years now. But what I'd love to do is have you talk just briefly about some of the things that are important to you as far as making an impact and some of the things that you've done through your ministry and your mission.
Thanks, Larry. Well, the big question is, we're all making some money. What are we going to do with it? Are we going to go buy cars? Are we going to give it to our kids who are going to probably blow it? Doesn't say much for what we think of our kids, does it? Or are you going to use that money as a leverage to help people live better lives? I think those of you who were in Ponte Vedra last November, was it? November. Remember, I'm the guy with 1,000 grandchildren. We've saved orphans in very vulnerable positions for over 15 years now, and watch these kids grow, and they call me Shwenkulu, and that's grandfather, so they must be my grandkids. But things are shifting in Uganda, East Africa. The people are being better cared for. There's still poverty, but now we can concentrate on the community and the environment. In the area we work with is very, very hilly, very steep, volcanic kind of terrain with terraced farms. And more often, we're seeing a lot of those terrace farms just slide down the hill. They've taken down all the trees. The earth is not hanging on as well as it should, and people are dying because of this. So what's the solution? Let's plant some trees. I got a guy. Who's there? I got a guy. He's not from Chicago. His name is Charles Byaragaba, and Charles has a great story. He was involved with the whole Rwanda genocide, and I met him many years later. But Charles wants to reforest his entire region. Now, we can get a tree for 10 cents. So next month, we will plant 100,000 trees. Just because I'm writing a check for my Morgan Stanley advised fund. I'd love to have people come alongside and plant more. We have the Arbor Day Foundation, who is thinking about doing a massive project of 500,000 trees in the next planting season, which is September. So this keeps me occupied, and I love it because I'm helping people on a generational basis. There was a guy who came over from Uganda, and the first time he stepped off the plane in Chicago, you know, he saw the city and all this stuff. And somebody asked him, well, what do you think of the city? You know, what do you think of our materialism, and what do you think of our excesses and everything else? He said, I am in awe of what each generation has done on the shoulders of the other. Realizing that we have a finite time on this planet, and if we don't somehow position ourselves so that those who come after us build on what we have built, it will go away. So this guy who's from Uganda, East Africa, never been to America, stepped off and made this fantastic kind of statement. And I've used that a lot. I just like DLP so much. You can tell the value of a company when you look at its soul. When I first met Don, he was driving a black beat-up Ford F-150 truck. You still driving that truck?
Still out back.
See?
Yeah. It's out back.
See what I mean? Bernie Madoff had Mercedeses and all that stuff, but not Don. And the idea that his thought process includes, what are we going to do with the money? How are we going to help people? How are we going to provide housing? How are we going to provide benefits to people in the US and wherever else we can? So I'm plugged into the mindset. I love it. I think it's unusual today. And I'm very proud to be a DLP investor.
Thank you very much, Lee. Appreciate it. Yeah, we can do questions after this. We're just going to go up next.
Okay. You're going up next? Q&A first? You want me to do Q&A?
Yeah, we're going to do okay. Yeah, I'm going to use this one.
All right, so let me grab my clicker. So a couple last slides here, guys, and then we're going to, Rich going to talk a little bit about the foundation, and please make sure take part in the silent auction. We got an hour and a half left. We will not be talking that whole time. We'll be bringing up music and having some fun here in a moment. All right, so last couple slides here to highlight. And I promise those of you who are new to DLP, if you talk to our existing investors, this is one of my favorite things is we put prospective investors with existing investors in the same room, which you can only do that if you're pretty confident people are going to say good things about you. Our existing investors do the best job of selling us. But what our existing investors, if they were willing to tell you their biggest complaints about DLP, they'll really generally only have one. And it's what the complaint we hear. If we get 100 complaints a year, we get this complaint at least 99 of those 100 times, maybe all 100. And it's that they want us to deploy their capital faster. That's the only thing people can complain about is why didn't we why didn't we deploy the money faster? So historically, in our 10-year history of doing this, we've averaged about 21 days for deployment. That 21 days is 21 days too many to most investors, which I understand for sure. But I just want to remind everybody and clarify that we do have a time frame to be able to deploy your capital. Each fund's a little different. We'll always do our best job of telling you. Right now, because of all those acquisitions in the housing fund, we're deploying pretty much immediately. We have a big closing coming up Friday. People will be deployed immediately. Pretty much same thing in our income and growth fund right now. The positive note fund always deploys immediately. Our lending fund would probably be 30 to 60 days today. But in the scheme of things, the amount of money you'd lose with that compared to that money sitting in a bank account or in most other options is literally dollars, if not at most hundreds of dollars, while you're waiting for deployment to earn double-digit returns then forever. As soon as that money's with us and is deployed, it will be deployed forever. So we go over this with you always. I'm doing this as a friendly reminder to our existing investors who wait for deployment, but also share that with potential investors. It's a wait list. There's a lot of people who want to invest. When for 10 years you've generated double-digit returns every single month, the word gets out. People want to invest, and our biggest source of capital every single month is our existing investors wanting to add more money with us, which is a great statement that they're overall happy despite them wanting us to deploy them even faster. So if you're interested in talking about anything on the investment side, especially new people, those here in CPOMs meeting us for the first time, reach out to Larry, to Rich. Where's Bob and Mike and Brett? Where are you guys at? Right over here. They're back of the room. So you guys have probably talked to each of them, at least one of them before, but they'll be around here tonight to chat with you and talk with you further, set up a one-on-one meeting with you, etc. All right, so upcoming events we have coming up to share with you guys. May 6th, we are going to be doing a live event in Bethlehem, Pennsylvania. It's not quite the weather as here, but it'll be pretty nice by May. So those of you here in CPOMs, never been to Bethlehem, come on up and see us. May 6th, meet hundreds of our investors, I expect, at Arts Quest in Bethlehem. We will be streaming that virtually as well. And then we're doing our next event like this, a full weekend event, which will kick off with a dinner like this and a full weekend of prosperity and elite activities, July 8th to the 11th. That is in beautiful Asheville, North Carolina. My opinion, no better place to be in July. So come join us up there. And then we'll be doing our event that we did in November, again, very similar to this one, in Ponte Vedra at the Sawgrass in November. So you're now, everybody who's here, you're on our email list. We'll be notifying you these, but wanted to share these out, save these dates. Come join us, please. All right, so I'm going to open it up to about 7 to 10 minutes of questions, and then I'm going to have Rich wrap us up and get to pianos and desserts. So who's got the mic? Larry does, so just raise your hand. Mike has one as well. Just raise your hand, and one of them will come over and bring the mic to you.
We also have online questions too that will filter in. So, but we'll definitely take some questions from here in the room. So just raise your hand. We'll come over to you. Rich, you want to start us off with the...
So let's see. All right, Don. So we do have a question coming over here we're going to go to, but while we go there, online, we have a question from Anonymous that asks, bond yields are now rising. What does that mean for the investors in the funds?
So the question that came in on Zoom, everybody, just a few more minutes here. Music's going to start then. We can get as lively as we'd like. So a few more minutes. So question was, bond rates are rising. How does that affect our funds? I don't know if that was said as a joke or serious. If anybody who's paid attention to bond rates, which to me don't make any sense why anybody would be investing in bonds, I'll just say, but that's maybe another topic. But in short, it doesn't have any major effect on us in any way. Our returns are so drastically uncorrelated to public markets. Doesn't have any direct effect on us. Question here live.
All right,
yes.
we have a question here from Mike.
Are you limiting your investments to the southeast of the United States? And then second part of that, will you look at any mobile home parks?
So we are not limiting our portfolio only to Southeast, but in general, we want to be in markets that have strong population growth, which tend to be the southern states. We're in 21 states in total today, but really throughout the Sun Belt is where most of our focus is. We'd like most of our focus to be North Carolina to Florida because it works for us really well operationally. We believe really strongly in those states. In terms of mobile home parks, we'd love to do mobile home parks if we could do it in scale. The returns are even more compressed in mobile home parks than they are in multifamily because it's a little bit easier to manage than multifamily, so it makes it easier for institutional capital to invest in it. So we've gotten close a number of times to doing mobile home park deals, and we haven't been able to recently. Here with my friend Jim, we recently invested in a community outside of Jacksonville where we're building a ground-up community RV and park home community, which is pretty similar. We'll have 735, I believe, pads of a mix of park homes and RVs, full-time residents and part-time residents. As much as it might sound contradictory, those who haven't paid attention to RVs, be a luxury RV community, but extremely affordable. So.
Hey, Don, could you explain how preferred equity works in relation to how DLP invests? And if, say, for instance, an investment breaks even on a deal level, how an investor is insulated?
Yeah, so Anthony's question was, how do preferred return investments work? So a lot of our investments with our operators, when we invest with some of these great gentlemen in the room, and we back them, and generally we're providing them with most of the equity. So generally we're providing them with 80 to 90% of the equity in the deal. But in order for us to provide most of the equity, because they're the ones running the deal and they're the ones who are most confident in the ability to execute on it because they're responsible for it. Our investors in our fund are in a preferred position, meaning they get their money back and generally a 12 to 15% return before the sponsor gets their money back. So in theory, the sponsor could not perform, but our investors still get a return of capital and a profit. So it helps further insulate what we already think is a well-insulated strategy and approach through the way we structure our investments. So thank you, Anthony.
Do? All
I'll
right.
take
So we
a
have
couple more and we'll
we'll take one more from online. We have Steve wants to know, will ownership of a bank alter the DLP business plan?
So question, I wasn't going to talk about this tonight, but so some of you may have saw, if you type DLP or even type my name in Google, you're going to see lots of press releases that came out yesterday that DLP is buying a bank. Thank you. Yes, pretty excited about it. So yeah, we're buying a public bank out of New York. We should close middle of this year. So pretty exciting. So it's going to be extremely complementary to everything we do. So it's going to help us have another source of more cost-effective capital to offer out to great real estate operators to build even more relationships with the very best operators. There's going to be loans that fit for our funds. The loans that fit there aren't going to be a fit for the bank, and there's going to be loans that fit for the bank that we wouldn't be able to get into our funds because of the returns. Big bankable loans generally don't fit our funds because they need a little bit more cost-effective capital. So it'll be very complementary. It's going to help us to go attract the very best operators that we want to work with. So it's only going to enhance our ability to grow the funds. If anybody didn't notice when I covered the DLP lending fund, that fund was a $500 million fund. We just changed it to $1 billion fund. So we have no plan to do anything but continue to grow our lending strategy. And then the other exciting part is how we're going to grow the bank is through all of you in this room and those of you online is our business strategy is going to be pretty simple. And it's not that far off from our fund strategy in that we will pay out the highest returns on deposits of any bank, period. So we expect all of you are going to give us your deposit accounts because we're going to offer the highest rates, which isn't high today, but it'll still be higher than you're going to get on your cash anywhere else, which is going to allow us to quickly grow the bank and deploy capital out to great operators. So we're really excited about it. We'll be talking more about it. If you're interested in it, we'll be hosting a webinar or two over the next few weeks. And we're going to pretty much take all the capital in the next couple weeks for that bank. So we'll talk more about it, but good question. Somebody call me? Yes.
Done great throughout the epidemic. What are your forecasts for when the so-called reopening happens? What do you foresee as the housing crisis that may or may not ever occur?
So I don't know if I heard the first part of it. Your question was in general, when do I think, or what do I think will happen with the housing crisis?
Yeah, main
okay.
part.
So look, everybody in this room on the operator side, we think, hey, there's got to be volatility coming. There's got to be distress coming. I tell you, the people here at the event, on the elite event side, our operators, were so hopeful in a lot of ways that there was going to be some distress and some volatility back in March, April. And there was like a week of it. And then prices soared up. And everybody realized, wait a second, workforce affordable housing does really well in stressful environments, something we all knew. And when less construction happens, construction got slowed down in a lot of places. That only made the challenge of having enough product. Every market in the country today virtually has the lowest supply of housing ever on the market for sale and for rent. Almost every market. In Lehigh Valley, Pennsylvania, as an example, in the last 12 months, the average home price went up 19%. 19%. So long story short, this market's so different from the last cycle. The last cycle, we had the greatest oversupply of housing. Today, we have the greatest undersupply. So I think some of the higher end markets, $1 million plus houses, luxury condo markets, those types of markets, multi-million-dollar homes, when there's a recession environment, those markets will get hurt. But I think the workforce housing space, it's going to be hard to hurt it overall. If interest rates were to skyrocket up, that'll have some effects on cap rates and yields. That'll create some great buying opportunities. May not be a great environment to sell, though. But for overall, to be able to generate great, consistent cash flow, we feel we're in a great position with the volatility that will likely come at some point to continue to generate great cash flow. Is that everything?
That's it.
All right.
All right,
so
let's keep it moving.
Thank you. Managing Director, Rich and Nick, Director of Risk and Multifamily Underwriting, are going to talk to you a little bit about our foundation and take it over.
All right, excellent. Thank you, everyone. Is everyone having a good time? Yeah? All right, thank you, thank you. So again, we're going to talk a little bit about the foundation. We're going to keep this brief. We're going to try to get us to the entertainment portion. I know everybody's anxious to do it. Before we go on, right, the silent auction, Don already said it. We have just a little over an hour. It's ending at 8:30. So if you haven't done so already, go ahead and log in. You could either text DLP to 243-725, or if you're online at home, you can just go to the DLPpositivereturns.org/auction. Again, we have a bunch of great gifts, memorable stuff that you can get. The bids end at 8:30, so get your bids in and bid lots. It's going to a great cause. So again, the DLP Foundation was started by Don back in 2019, and really it was the purpose to try to battle two major epidemics. One that we do in the company, right? Everything we're doing with impact investing is really around affordable housing and jobs creation.
Thanks, Lou.
Right? Thank you, sir. So again, what I'd like to do here is quickly go and ask you to pull out your phones. We're going to ask you another question. Think about it. And again, in small words, we don't need long sentences, but what can you do to make an impact, right? So again, if you get your phone, QR code R671, if you're not in there already. And again, in just a few words, what can you do to make an impact? Oh. There you go.
There you go.
Invest. Yes, that's a good one.
DLP silent auction.
Kindness, all of them. Coach, give. Love it. Donate to the foundation. Absolutely. So create jobs. All of these are great answers, right? Give time and money. Invest in DLP. I love all of these. So again, none of these are bad answers. They're all right answers, right? They're all great causes. What we would say is you're already, if you're an investor in DLP, you're already making an impact by investing in DLP. You can directly invest in our funds, and we donate 1/4% of all the capital that we raise goes to the foundation. Also, 1/4% of all of our net revenue goes to the foundation, and our giving policy is 1% of all of our employees' time goes to the foundation. And Don's also generously now put out there that 100% of all the proceeds from his book, Building an Elite Organization, will be going to the foundation, as well as, awesome. As well as 100% of all the proceeds from the American Institute of Investment Housing. So great stuff there. So with that said, I'm going to turn it over to Nick, quickly tell you about some of the great works we've been already doing and some of the stuff that's coming up.
Right. So as Rich mentioned, we're looking to combat two epidemics, affordable housing and making sure that people are able to get well-paying jobs. Part of this is us giving back to people who are affected by either of these epidemics. And some of that comes through our partnerships with great foundations like Habitat for Humanity, St. John's Housing Partnership, which is right in our backyard in St. Augustine. We'll talk a little bit more about the Sherman family up in the Bethlehem area in the Lehigh Valley, who we directly helped. We set up several blood drives across all of our major corporate offices in the midst of early COVID to put some blood in the bank for people who really needed it. We also made monetary donations to organizations that benefit these epidemics as well. So I want to highlight the Sherman family, and we did talk about this in our previous galas and events, but it's been a tremendous renovation to a family that was really, truly in need of some support from people who understand how to make real estate better. You can read it on the screen, but I think that the best way is to really just play a small video.
So we're out here with the Sherman family and Daisy in particular, and the family has been going through what's called EB, and it's a very rare skin disorder. They originally came to DLP really to help sell their home. And we come to find out that the only solution that there really was to actually renovate their home, make their current home more comfortable for them, and give them all the solutions that they need in order to take care of Daisy.
When I came out and talked to Dana, we went over several different options. We looked at selling the house, buying another house, and even the possibility of them moving back to Florida. Once we ran through everything, we realized that, this is Daisy's home. We all came to the conclusion, when I brought it back to Jonathan and Don and everyone, that the best thing to do would be to update the house so that Daisy can stay here with her family and, be around the best support that she has.
When Don first heard about the situation with the family, he immediately wanted to step in and help in any way that would be possible. Through our DLP Positive Returns Foundation, we were able to take care of the family and all of their needs, so they wouldn't have to be burdened with any of the financial difficulties and all of that goes on with the renovations of this basement. So that's where we came into play with the Positive Returns Foundation. Since the pool has been installed now, how has this helped with Daisy's physical therapy?
It's made it a lot easier for her because her body's weightless in the water, and she doesn't have the pressure from standing. So in here, the exercises that she couldn't do outside of the pool are more comfortable for her to do in here, so she gets a more full range physical therapy. It also benefits working multiple joints, and it helps also with the wound aspect. Being in the water makes the wounds feel better and help clean them.
Thank you, guys. Let's all give another round of applause for this family that's really going through it. And this is just one of the ways that the Positive Returns Foundation looks to make an impact in people's lives. And we have a message.
I wanted to say thank
From
you
the
to
family.
DLP for renovating and preparing my basement for the pool. It has changed my life for the better, so thank you very, very much.
The only way that we... Whoa, hey. That's not the only way that we look to help people, certainly through monetary donations and the donations of our time and effort, but it's smaller projects here and there, ways that we can serve our communities directly. An example, I mentioned the St. John's Housing Partnership, which is right behind St. Augustine down in St. Johns County, Florida. And we've done a number of service projects with them, but recently we got a personal message as a thank you for a donation made to continue supporting the renovation of someone's home who is wheelchair bound and just really needs the support of their community. And it's little donations here and there that really could truly transform someone's life.
It's Cheryl with St. John's Housing Partnership. Just wanted to say thank you again to you all for responding to our outreach for the gentleman who has had a triple bypass surgery and is on oxygen and the home repairs that he needs. We received $1,430 in donations. And on top of that, St. Vincent de Paul, who was already donating materials for the ramp to be built, is donating another $3,000 towards materials for the home repairs. Then on top of that, DLP Real Estate is donating $3,700 to complete the gap that we need to get this family safe and secure. So I just wanted to say thanks to everyone on behalf of St. John's Housing Partnership. Have a great rest of your day.
Thank you, everyone. So, we're proud of what we've accomplished so far, but I think the big things are yet to come, and a lot of those things are going to come in the form of serving our own communities better. And some of these things are listed out on the screen, but what we'd like to try to endeavor this year are ways that we can assist in rental payments for people who are really going through it in terms of if you lost your job, if there's a COVID impact in your family. We want our residents to feel that, as landlords, as managers of their communities, we're there for them. We also are looking to expand our programs to help people find well-paying jobs. And some of this is coming in the form of job assistance, education grants, internships with DLP for those who maybe aren't fortunate enough to go to a top name school, but still have hopes of working in construction or in real estate or management to get experience to put on their resume. We're also putting it out there that we'll make small business loans for other entrepreneurs like we were 14, 15 years ago in hopes of growing their own business. As Don mentioned, the best way to create jobs is through growing small business. And as well as first-time home buyer grants or home renovation dollars and cents that can really make a difference in someone's personal situation. So how can you help? The Positive Returns Foundation is a vehicle that we've provided for all of you, for all of your contacts who wish to make a difference, who wish to make an impact through your investments. As Rich mentioned, we donate 1/4 of our net revenue, 1/4 of our capital raise, and 1% of our employees' time to the Positive Returns Foundation, and focus that on job creation, entrepreneurship, and making a difference in affordable housing crises. So you can make a difference by donating directly to the Positive Returns Foundation by visiting DLPpositivereturns.org, as well as participating in our silent auction, wrapping up in just about, 30 minutes?
We've got about an hour, one more hour left, yeah?
So Positive Returns Foundation website is now live, DLPpositivereturns.org. Please visit on your web browsers to get a little bit more of information about us, what we're working on currently, and how to donate. Don't forget to follow us on Facebook. And I think by far the easiest way to make an impact and participate with the Positive Returns Foundation is through smile.amazon. And this is the Amazon Smile program where they have partnered with graciously with DLP Positive Returns Foundation to donate 0.5% of all of your purchases on your behalf. It's completely passive, doesn't cost you a dime. And I think right now our IT gurus are sending you all an email with a link and a tutorial video on how you can register through your web browser and through your phone app to donate along with us to the Positive Returns Foundation with every purchase you make.
Yeah, and it's an easy way, right? I mean, nothing you have to do other than your normal shopping when you go on Amazon, right? It's an easy way for you to give back. You just choose DLP as your foundation you want to continue to donate to. And then, again, if you're having fun, thank you, sir. Appreciate it. If you're having fun tonight, we have a lot more fun to come. We're going to have some cool entertainment, right? We're going to get Brad and Eddie coming up from New York Dueling Pianos. They're going to give you a lot of excitement going on here. But also, this Saturday, we are going to be hosting a nice little afternoon event where we're going to be having a chipping contest with Davis Love III, who is a local here, and many of you who are from St. Simon know. He's going to be out there. You're going to have the opportunity to do some autographs with him, have the chipping contest. We're also going to have a great rum tasting. Did everybody like the rum tasting out tonight?
Yeah.
Show? Yeah. All right. Great. And we're going to have caricatures and more. There will be a sheet that you'll get with the information for Saturday. So be sure to grab it on your way out. If you're interested in going Saturday, it's at 2:30 p.m. at the Miracle right here at CPOM. So with that said, last Slido. Want you to get your phones out again and put in. We're going to start the dueling piano. What song do you want to start off with? You have 5 choices here for the first song. Unless someone wants to throw out a wild card. All right. Let's see. Brad and Eddie, come on up. You guys.
Personally,
yeah,
I feel like the Fresh Prince of Bel-Air theme song.
Oh. Wow. Oh, it's getting close. Looks like it's going to be Brown Eyed Girl.
I want Casey to talk.
You know what? Pause it. We have a treat for you. Brad and Eddie, we have a treat. So,
For us?
talking about the Sherman family, we're going to actually bring to you live Daisy and Dana, who are going to join us right now. So, can we get her on?
Hi, I'd like to personally thank everyone from DLP who made this amazing gift for me and my family possible. This made a big difference in my daily life.
There she is.
All right, Dana, Daisy, good evening. Thank you for joining us. How are you doing?
We're good.
Excellent, excellent. We appreciate you joining us. I know you wanted to say some words to the folks here, so the floor is all yours, and thank you so much for just being so wonderful and working with us and allowing us the opportunity to work with you. Thank you.
Thank you. Hi. I would like to personally thank everyone from DLP who made this amazing gift for me and my family possible. This has made a big difference in my daily life. The family fun room gives me a cool hangout space to play video games, video chat with friends, and challenge my family to ski ball or board games. Also, the space is great for movie nights. The gym room gives me more space and options for my video physical therapy sessions. The best part is the pool room. Being in the pool makes my wounds and joints feel better by being in the water, and it makes my physical therapy exercises fun instead of like a chore. Before the basement renovation, my parents were worried about how they were going to make the repairs to make the basement safe and functionable. DLP was the answer to my parents' prayers. I am happy knowing that my parents don't have to worry about the basement anymore. Thank you doesn't seem like enough to express the gratitude that me and my family feel, but here it goes anyway. Thank you so very much for making a huge impact in our lives. Thank you.
It was Brown Eyed Girl, so there it is.
It was Brown Eyed Girl. All
Brown-Eyed
right.
Girl.
That'll
All
work
right.
just fine.
One more round of applause for everybody that leads this amazing group.
Yeah.
We get to play all over the world, and we have such a good time performing for all kinds of different events. But certainly, when we're doing something positive like this, it's extra fun for us. So thanks for having us. New York pianos, get ready to clap and sing.
Thank you so much, everyone, for joining us and sticking it out here till the end. You have a few minutes left until the silent auction ends. So if you go to the link that you see on your screen here, dlppositivereturns.org/auction, or text DLP to 243-725, you can bid. There's just a few minutes left. Thank you for staying on here on the live stream. Until next time.